Today we are looking at a very popular stock that is PepsiCo Inc., ticker symbol PEP, and it's currently trading at $172 a share. Now this is a favorite for dividend investors due to its massive 2.94% yield. What we're going to be doing today is seeing if this is a buy or a sell. So firstly, I'm going to be going to my automated stock valuation spreadsheet to see if it is a buy using discounted free cash flow, the comparable company model, and finally, the Ben Graham formula for value investing to see if Pepsi is a buy or a sell. Now, let's just have a look at the share price over the last year. It's actually down about 4%, and if we extrapolate this over 5 years, it is up about 40%. If we compare it to its closest rivals, which as I say is Coca-Cola, it is up 40% compared to Coke's 29% over the last 5 years. But unfortunately, if I was to compare it versus the SPY, which is the market and the top 500 companies in the S&P, it has underperformed very recently, actually, because the market has been on a tear, up 84% over the last 5 years, whereas Pepsi is only up 40%. You can see it has been a lot less volatile, consistently going up, but basically since October of 2023, the market has had a massive run up. But is this the time to buy? So let's go to my spreadsheet. What we'll do is we'll type in PEP, and what this will do is it'll give us all the company financial data so we can look and have a deeper look in that. So Pepsi, as I said, $172 a share, currently market cap of 236 billion. Let me make this a little bit bigger. I don't know why that was zoomed out. And P ratio of 26.22. Now, if we look at the current market average, it is 28.41. So Pepsi is trading a little bit below the market in terms of P, which is very good to see. Earnings per share, $6.56, beta of 0.5, which means it is a lot less volatile than the market, 1.4 billion in shares, and a target price of 187. So analysts are pretty bullish on the stock. Now, we talked about the dividend, 2.39%. That means they'll be paying you $5.04 per share. 7 billion in dividend. Is it safe? It is safe, but it is on the higher side. You want to see these payout ratios a bit lower, 76% and 87%. If we have a look at the ex-dividend date here, I will go to a website here, Dividend Max, which is very good. If we just type in Pepsi, we will see the ex-dividend date. Now, actually, I'm guessing they haven't declared it. It was previously declared 29th of Feb, so if you had the shares before then, you are probably going to get paid sometime on the 1st of April, which is very nice. Looking at this, I would say the ex-dividend date will probably be on around about the 7th of June, so buy your shares before then if you want to get paid. Now, what we'll do is we'll jump straight over to the revenue, and let me rejig this chart a little bit. So, as we can see from the annual revenue growth, it has increased in the trailing 12 months. Actually, they haven't released it. We'll look at the 2023 numbers. 91.47 billion, up from 86, 79, 70. This has been increasing pretty consistently. It had some slow years between 2015 and 2020, but the 5-year growth rate is around about 7.2%. So that is trending in the right way. Next, you want to have a look at net income, and this is a pretty similar story over the last few years. You can see it's actually down 6.23%, but this is because in 2018 it was a lot higher. So if we have, well, let's just change this number here and get rid of, we'll go C13, and we'll look at the last 4 years. You can see it's about 5.5%, but I do normally look at 5 years. I want to start looking at the 5-year growth. It has increased to its all-time highs of, well, sorry, not an all-time highs. Apart from the 2018 number, which was 12.5 billion in profit, it is the highest. So you can see it is trending in the right direction. Shares outstanding. What we want to see is we want to see them buying back their shares if the stock is overpriced. And you can see Pepsi has consistently bought back shares. Assets versus liabilities. Once again, they can see that the liabilities has been increasing, but the assets has been pretty much the same. So let's look at the free cash flow. Free cash flow currently 7.29 billion, just shy of its all-time high in 2015 of 8.11, but it is trending once again in the right direction. 5-year growth rate of 5.26. Dividend history as well. These are the dividends going back to 2000, and they were paying, well, actually it hasn't included 2004, this chart is, my mistake, but you can see they were paying the amounts back then, 14 cents a share, but this has been steadily increasing up to per quarter of about $1.26, so that is good to see. Now let's have a look at some valuation. The first thing I'm going to be looking at is the discounted free cash flow model, which is a way of valuing companies based on their future free cash flows. Cash from operations minus capital expenditures is the free cash flow. Now, off the bat, this is giving us a stock price of $240. I mean, it's currently trading at a 40% discount. That is very, very good to see. Let's see if these numbers do make sense. First, we will look at the revenue. Revenue is based on the averages about 5.92%. Let's have a look at what analysts are saying in terms of the revenue. Now, they have been growing at around about, sorry, what did I say again? 7%. Let's have, oops, I've shown the formulas. Let me undo that. Where did I click? That button. I was meant to click another button, but anyway, good thing I had it. Figured that one out. So they're expecting around about 5-year growth rate of about 7%. So actually, analysts are pretty bullish on the stock, but I think we're happy with this number. Net income margins have been consistently about 10%. Decreased actually in the most recent year, so I'm pretty happy with that as a number as well. Now, net income to free cash flow, I would say that the free cash flow rate, even then on the more bearish side, we'll even bring it down a bit. We'll look at about 70%. Still a buy, 280. So discounted free cash flow really loves Pepsi as a stock. Now next, we're going to look at the comparable company model. And what this is a way of evaluating companies using metrics of other businesses of similar size in the same industry. What we're going to be looking at is EBITDA, which is earnings before interest, sorry, my mind's gone. Taxes, depreciation, amortization, and then net income, EV to revenue, EV to EBITDA, and PE. So this is, because I added a new column. It's put my column off at the end there. Let me just make this a bit smaller. There you go, we have my PE now. So what I've added actually is a 5-year growth rate, because I think this would be really cool to see different companies. So first, let's go with the classic KO. Another company that I think are pretty similar is Monster, which I believe is MNST. Yes, MNST, and then Dr. Pepper. Dr. Pepper share price. Keurig Dr. Pepper KDR, I believe. Let me do that. KDR. Nope, that is a different company entirely. KDP. God, it's Pepper. Sorry, I should not blaspheme there. But what we want to see is lower numbers here. Actually, this is the column I added. 5-year growth rate. So you can see 5-year growth rate of Pepsi in terms of revenue is about 7.2%. Coke is 6%, Monster 13%, and Keurig. So these are the more faster growing companies, but obviously they're, in terms of their revenue and market cap, is a lot less. But you can see that it's most direct competitor to Coke. In terms of growth, it is doing a little bit better. So if we look at EV to revenue, once again, we want lower numbers here. It is one of the lowest, it is the lowest, sorry. Keurig Dr. Pepper's close, Coke 6.3, Monster 8.3, EV to EBITDA, second lowest, only behind Keurig Dr. Pepper, and PE ratio, second highest, Monster's the highest. So if we look at this based on these exactly, you can see it is a buy again, given about an average of 236. And if we were to compare that with the free cash flow, the valuation, 240. So that is a buy also. Now let me just, for giggles, compare it against Coke directly. Let me just bring that debt column in a little bit, and I'll do it on my other sheet. I'll do it live. Now if we were to look at the just comparing versus Coke, it does bring it down a little bit, but in terms of that, it is still a $210 stock. So very interesting to see there. And finally, let's have a look at the Graham formula. This is Ben Graham's formula for value investing. I don't think it's going to like this too much. Analysts, as I said before, 7.01% growth. AAA bond yield is pretty high, as I'm sure we all know, 5.03. That's still the same. Fair value of 80, Graham price of 60. So it does not like the stock. But the interesting thing is comparable companies model and discounted free cash flow model really like Pepsi as a stock. Right, guys, and thanks for watching. Please give a like if you've enjoyed the video. Check out my Patreon as well for this spreadsheet. then you can calculate any stocks and do what I do in the videos, but you can do the stocks of your choosing. So yeah, thanks a lot, guys, and I'll speak to you next time.